Hi everybody, Frank Finance here. Hope you're having a wonderful day. Today we're going to be doing a simple guide to retirement accounts. We're going to be talking about 401ks, 403bs, 457 plans, IRAs, and we're going to go into a little bit on tax structure with traditional and Roth versions of those accounts. Now, all these accounts really have the same purpose, the purpose of helping individuals save for retirement. They are different provisions of law and they are nuanced between them. Let's go through that. First up, we have the 401k. These are offered by private for-profit companies. The contribution limit for 2021 is $19,500. If you're aged 50 and above, that is $26,000 a year. Now, these are offered in both Roth and traditional, but it depends on the employer if they have those plans set up. Now, if you wanted to withdraw the money before age 59 and a half, you'll pay a 10% penalty. But if you withdraw it after age 59 and a half, you don't incur that penalty. Now, most employers with the 401k do offer some sort of match. If they do offer a match, I suggest you take it. Thank you so much for watching up to this point. I really appreciate it. If you haven't already, please consider subscribing. Leave any comments down below. Let me know what you think of the video and leave a thumbs up. That really helps me out. All interactions do. So back to the video. Next up, we got our 403bs. These are typically offered by nonprofit and government entities. The contribution limits are the same as the 401k at $19,500 and $26,000 respectively for those over 50 years old. They are offered in both Roth and traditional plans depending on your employer. And the age you can withdraw without penalty is age 59 and a half. And your employers typically will offer some sort of match. Next up, we have 457B plans. These are also offered by nonprofit and government entities. Often you'll see 403Bs and 457s offered in the same benefits package side by side. They are different plans. One of the main differences is the contribution limit. It is the same amount as a 403b and a 401k at $19,500 and $26,000 for the catch-up. However, the change here is that if your employer is contributing in a match, then that does count against your contribution limit. So if your employer contributes $5,000, you would only be able to put $14,500 in the plan. Now, be careful here because if you contribute too much, your employer will stop contributing and you won't be getting the full match. So be careful there. Now, also, the age withdrawal limit is the same unless you leave your employer. You can actually draw upon that account without incurring the 10% early withdrawal penalty. Last up, we have individual retirement accounts or IRAs. Now, these are not employer-sponsored accounts. You can open up one of these accounts through a Fidelity or a Charles Schwab, for example. Now, for 2021, the contribution limit is $6,000 per year. And if you're 50 or older, that contribution raises to $7,000. These plans are offered in both Roth or traditional. And the early withdrawal age is before age 59 and a half. If you withdraw money before that time, it would be a 10% penalty. So make sure you don't withdraw early. And these are not, they do not accept employer contributions as they are not employer-sponsored accounts. Next up, I want to talk about the difference between Roth and traditional plans within inside of your retirement accounts. So I want to talk about the tax considerations first. When you have a Roth account, you put money into it and you've paid the taxes up front. That money can grow tax-free from there on out. And when you withdraw the money, you don't pay any taxes because the taxes were paid up front. Now, when you go to retire, there is no minimum distributions ever on Roth accounts. On the other side of the house, we have traditional. Now, you don't pay taxes on the money when it goes in. Rather, you pay taxes on both the principal, which you put in, as well as the growth on the account. These accounts also have required minimum distributions that start at age 72. Now you're probably thinking to yourself, okay, great information. What do I do with it? Well, when it comes to Roth versus traditional, you really need to look at your anticipated federal tax upon retirement. Do you think you're going to be making more money or less money? And in retirement, do you think taxes are going to go up or down? Now, we don't have a crystal ball, so you really have to make your best guess here. Now, when it comes to Roth, typically, if you believe that the rates are going to be higher in the future, or you're going to be in a higher income bracket upon retirement, you probably would want to go with Roth now. Now, on the flip side of that, if you in the future you think either rates are going to go down or your income will be lower in retirement, traditional will probably suit you just fine. But in a lot of cases, it's great to utilize both Roth and traditional strategies. That way, upon retirement, you can use those plans to your advantage and choose which accounts you want to pull out depending on different tax policies at the time. Now, I'm going to throw up a comparison on the screen so you can look at them side by side. The purpose of these accounts is really just for retirement savings. There's no one that's better or worse than the other. The employer sponsors accounts like your 401k, your 403bs, 457s, they typically and sometimes have less investment options than your IRA. So the IRAs are a little bit more robust, but the thing there is you have a contribution limit where the other ones have a higher contribution limit, which for a lot of people, they need a higher amount. So the whole point of these accounts is to utilize them to their, kind of use one here, one there. But at a minimum, please just get started. Open up an account, whether it's through your employer or through a brokerage firm with an IRA, and at least start your investment journey. And if you have any questions or comments or you just concerns or anything about this video, just drop a comment down below. I'm so happy to be helping people out on their journey. If you haven't already, please subscribe, like the video. That really helps me out. Thanks so much. Thanks so much for watching today's video. Frank Finance out.